Fellow investors, welcome back to First Light. This is the second in a series of videos that we wanted to put out, and the idea is we wanted to address issues that we kind of run into, that you'll run into in kind of the mainstream media and in the financial press, but issues that we don't think are very well explained, explored, or discussed. We did our first video a couple of weeks ago talking about sort of the 10 things that you need to understand about the US trade deficit. And today's video, I think, fits into this category absolutely perfectly, and that is Bitcoin. Bitcoin is something that is often mentioned in the financial press and the mainstream media, but I think is very, very poorly understood. Again, the purpose of these videos are to be sort of educational, to take issues that you come across, but make sure that we understand them, to sort of approach them objectively, almost academically, but make sure that we really understand them. And of course, armed with more information, we're more likely to make better decisions going forward. Now, like I say, Bitcoin, I think, falls into this category beautifully. Bitcoin, interestingly, I think Bitcoin has a bit of a perception problem. And I do blame the mainstream media in part for this, and that is that when Bitcoin is ever discussed, it is always lumped into some broader category called the crypto space. And I think this is a terrible mistake, to the point of being almost irresponsible. Bitcoin has absolutely nothing to do and nothing in common with anything else in what they like to refer to as the crypto space. The only similarities that Bitcoin has with anything else is the way that you buy it, the way that you sell it, the way that you hold it or transfer it, because it works off something called a blockchain. And the other coins work off of their own blockchain as well. But that doesn't mean that they have anything in common. I mean, it would be like lumping a diamond ring with a bag of potato chips just because you can purchase both items with a credit card. So now we're going to call it the credit card space. Oh, what's happening in the credit card space? Well, diamond rings are up, potato chips are down. It's ridiculous. These things have nothing in common. There has been an explosion of altcoins in the last couple of years. These things are 99.9% of these things are completely meaningless. They have no value whatsoever. They have no utility. This explosion, partly it's because the technology that you need to create your own coin is now readily available to anyone. I can create my own coin in 15 minutes. So there's been an explosion in sort of nonsensical coins. There's also, obviously, that space is ripe for fraud and all the things that we've seen in the past. But to lump Bitcoin into that conversation is just irresponsible. Bitcoin is something that you need to look at independently. You need to understand what it is, how it works, what are its fundamental properties, and more importantly, what is its utility? What does it do? What real world problem does it solve? And that, and only that, will determine whether this is something that will keep growing and appreciating or not. What is the fundamental utility? And I can tell you that 99.9% of all the other coins have absolutely zero utility. So to lump Bitcoin into this sort of cesspool, I think is just irresponsible. So we wanted to, and by the way, I can tell you guys that this stigma that I'm talking about is very real. A lot of my, close friends who are very successful financial professionals, both on the sell side and the buy side, you would be amazed how many of these very accomplished, successful people don't understand Bitcoin. They simply, sometimes when the subject comes up, you can tell even just the way they react, it's this kind of reflexive skepticism, because in their minds, they're kind of lumping it together with the swamp. And I just think it's a mistake. What we need to do is make sure that we understand Bitcoin for its own merits and decide whether it's something that you want to consider or not. Okay, the typical disclaimers apply here. Okay, this is not financial advice. We're not recommending anything. Speak to your financial advisor before you make any major investment decisions. So we need to get that out of the way. Okay, let's talk about Bitcoin. Now, we have to start very briefly, just a word on kind of the history of money. Because in order to understand Bitcoin and its utility, you have to understand how money works. Now, in the history, so throughout the history of mankind, humans have used all sorts of crazy things as stores of value and as a means of exchanging value. Everything from seashells to rocks, eventually precious metals, and of course eventually gold, which for thousands of years was sort of the store of value and sort of the medium of exchange. But of course, gold has a problem. Well, a few problems. For example, portability. I mean, gold is incredibly impractical. I mean, you can't sort of go around lugging bars of gold around. It's a very impractical thing. Gold has a portability problem, and gold has a divisibility problem because it's very hard to sort of cut into smaller units. And again, it's just very cumbersome and inconvenient. So, of course, humans eventually realized that it would make sense to create a paper IOU that is backed by gold. So it's an IOU, but it's backed by the asset, which is gold. And this was the case basically with the dollar. That's all the dollar was. The dollar was a piece of paper, an IOU, but it was backed by the dollar for decades. This meant that every dollar was backed by gold, and gold, of course, has a limited supply. There is a bit of gold mining in the world, but if you look at the percentage of the gold that's mined compared to the stock of gold in the world, it's negligible. So I think it's fair to say that gold is a sort of scarce, limited asset. And therefore, the dollar, had disinflationary properties because it was backed by an asset of limited supply. Now, all of that changed in 1971. In 1971, Richard Nixon took the dollar off the gold standard. And from that point on, the dollar became what's called a fiat currency. A fiat currency is nothing more than a piece of paper. It's a piece of paper, but it has value because the government tells you it does. And because the government has the power of taxation, and the government has a lot of guns, and the government has laws, and they can enforce those laws, we have no choice but to accept it. Now this piece of paper has value because the government forces me to believe that it has value, and it's now backed by the taxing authority of the government. And that became the case after 1971. The problem with fiat currencies is that because they're not backed by a finite asset, they are very vulnerable to inflation, and as we've seen in recent years, very vulnerable to money printing. It's just a piece of paper, and they can print it whenever they want. And so, of course, naturally, a house in 1970 cost $100,000. That same house today is probably $2 million. Not because the house is 20 times better than it was in 1970. It's because you need 20 times more dollars to buy it, simply because of the debasement of the currency and the loss of purchasing power of the currency through inflation over time. So anyway, we needed that background before we get started. Now, how does Bitcoin fit into all of this? Well, Bitcoin was born as a product of the financial crisis of 2008. Now, you'll remember in 2008, I mean, we really were in a situation where pretty much every major financial institution in the world was insolvent. It really was a situation where, if you thought you had $100,000 in the bank, you'd go to the ATM and it would show you a zero balance. I mean, now if you do that to enough people, you basically get complete and total anarchy and just the complete collapse of society. We came very, very close to that, but governments figured out a way out of it. And their solution was to get central banks to print as much money as they could and to use that money to buy all the toxic assets that had infected all of these financial institutions in order to keep them afloat and to make sure that the global financial system didn't collapse. But of course, this was a money printing exercise to the extreme, and it wasn't just the US. Every major currency in the world started to hit the print button in the most extreme possible manner. Now, this meant the inevitable debasement of all of those currencies. You can't print unlimited amounts of a currency and not expect its value to fall. So in this context, in 2008, somebody by the name of Satoshi Nakamoto published the Bitcoin white paper. Now, nobody knows who Satoshi Nakamoto is. Some people think it's a person. Other people think it's a group of people. I don't think anybody really knows. There are a lot of crazy theories about it. But he published the white paper to address the issue of monetary debasement. And what he proposed was something, nothing short of revolutionary. He proposed the world's first totally decentralized monetary network It would be an entirely peer-to-peer network where any individual anywhere in the world could transfer monetary value to any other individual instantly at zero cost. And importantly, the network would be totally trustless, meaning it would require neither a government nor a financial institution for either issuance or transactions. So this is a monetary network that exists completely outside of the legacy financial system. Now, obviously, this is an incredibly revolutionary concept with massive implications at all levels, economically, politically, etc. So let's look at how it works. Now, first of all, the network would work on something called a blockchain. And the blockchain is, as you guys I'm sure know, it is basically a digital ledger that records and reconciles all transactions instantly, and it is entirely based on math. Imagine a kind of giant Excel spreadsheet in the sky. Now, every transaction has to be validated by the network, so it's not, and it's based on math, so it's not really corruptible. And for example, if you have an Excel spreadsheet and you have numbers going down a column and numbers going across a row, and you wanted to add them, if they're not the same, and you wanted to add both, right, and they have to match, if it's not the same, you're going to get an error. It won't work because it's based on math. So the blockchain is very similar. It is based entirely on math, and therefore it's kind of impossible to corrupt. I mean, 2 + 2 is 4, and there's just no way of manipulating that. So it's a mathematically based system where every transaction is validated by the entirety of the network, and that's sort of how it works. Now, I do have to mention that, since 2008, the Bitcoin network has never been hacked or manipulated or in any way, altered, because it is completely decentralized. And like I say, based on math. Now, there are cases where somebody can steal someone else's Bitcoin by kind of, learning their keys and their seed phrases, etc. But in terms of the network itself, it's completely unadulterated. And because it's based on math and the blockchain, it kind of can't be. So it's important to mention that. Now, it's also important to mention that the network is not controlled by anybody. It's not controlled by any person or any institution. It is totally decentralized. If you right now decide to buy 0.00001 Bitcoin, you are now part of the network. The network runs on the basis of all of its participants. It does not have a central authority. Nobody controls it. Nobody owns it. And like I say, nobody can manipulate it. Now, the blockchain, I think it's kind of interesting because it really is a more advanced technology than what you see in the financial world today. It is amazing to me, and that to this day, to buy a stock, you're still looking at, some things are sort of T+3 settlement, T+1. That is absolutely ludicrous that in today's day and age that things work this way. Even when you buy a stock today, you're not really buying the stock. You're buying an IOU. Because stocks are sort of rehypothecated, 12, 13 times. And all of this has to get cleared. And so the financial backbone of the present, the current system is very, very antiquated, incredibly inefficient. If you look at execution, settlement, and custody, there's just masses of intermediaries everywhere, and it's just so cumbersome. It's an incredibly inefficient system, and I'm one of those persons that's convinced that the financial markets will have to migrate to blockchain-based systems, which are much more secure and they're much more efficient. They're instant. The transaction in the world of blockchain, the transaction is the settlement, and the settlement is the custody. It's nothing. There's no need for intermediaries. Everything happens instantly. So it's just a much more efficient system. Even if you look at banks these days, for me to send money to another country, it takes 3 days and $30, which is absolutely ludicrous. In the world of blockchain, these things are instant and at zero cost. So I just needed to mention that. Okay, let's get back to the issue of money. Now, what are the kind of basic functions that we look for in any money? Well, it's basically 3 things. Money has to serve as a unit of account. We have to be able to price things very accurately. Number 2, it has to be a medium of exchange, so something that we can use to transact amongst ourselves in an easy way. And number three, you want it to be a store of value. You want your money to be something that you hold and that preserves its value through time. Now, if we take these three sort of money functions and we compare the dollar, gold, and Bitcoin, just very quickly, as a unit of account, obviously the dollar is superior. Clearly, I mean, nobody is pricing anything in gold. Nobody's pricing anything in Bitcoin. So the dollar is clearly a superior unit of account. As a medium of exchange, again, the dollar by far the best solution. Everybody knows it. Everybody has them. Everybody uses it. Nobody's buying things with gold or Bitcoin. So the dollar also wins this category as a medium of exchange. Now, when we get to number three, the dollar falls apart. As a store of value, the dollar is not bad. It's awful. I've seen studies that estimate that the monetary debasement of the dollar, and not just the dollar, all currencies are doing the same thing, is between 8 and 12% per year. Now, this means that if you just hold dollars, in 5 years, you will have lost half of your purchasing power. And again, this is happening around the world. All major currencies are playing the same game, which is a continuous expansion of the monetary base, which means the currencies are in a constant state of debasement. And if you look at the dollar index and you have the illusion that it's stable, it goes down a little, up a little, it's not true. It's like a series of elevators in a building and they're all going down. Some go down a little faster, then the other one speeds up, but they're all going down. So even if you look at the dollar index, you have a very false sense of stability because all major currencies in the world are debasing at a very aggressive rate. So as a store of value, the dollar is awful. As a store of value, gold and Bitcoin are superior simply because they are finite and therefore they retain their value over time. So what we've established here is that gold and Bitcoin shouldn't be seen as a transactional currency. They should be seen as a store of value because that's where they have a comparative advantage. And that's kind of the mindset because, you hear people say, well, what's Bitcoin worth? I can't even use it at the grocery store. Well, you can't use gold at the grocery store either. And yet gold has been a wonderful store of value for, hundreds of years. So you have to think of Bitcoin as a store of value. Now, there may come a time when you can use Bitcoin sort of to go to Starbucks. There are companies that are working on layer 2 applications that allow you to use Bitcoin for, a lot of small transactions. There's a company called Strike. They created something called the Lightning Network. It's run by a young guy called Jack Mallers, who's really, really bright. I strongly recommend, if this is a subject that you guys are interested in, I recommend you listen to interviews with Jack Mallers, a very bright kid, explains things very well. So there may come a time where that is the case, but you need to look at Bitcoin kind of as a comparison with gold because it is designed to be a store of value. And because the network has to validate every transaction, clearly it was not designed to handle 14 million transactions a second. It was not designed for that. It was designed to buy, sell, hold, transfer, economic value, but it wasn't designed for sort of day-to-day use. So this is something very important for you guys to remember. It's supposed to be a store of value. It's not supposed to substitute, dollars and cents, at least for the time being. So now that we know that is the case and that we have to look at Bitcoin kind of compared to gold, let's actually look at how would Bitcoin stack up as a store of value compared to gold? Okay, well, let's look at some of the properties that we would like to have in a store of value. What are some of the properties that we would like? And then let's compare the two. All right, the first one would be durability. Okay, in terms of lasting, which one could last longer? Well, there's no reason to believe that gold will sort of be corroded over time. There's no reason to believe that the internet will disappear. So I think it's probably a tie. I think both gold and Bitcoin, you could say have similar durability. The next thing would be portability. Okay, you want a store of value, a money, something that you can easily take from one place to another. Now, here, clearly Bitcoin has the advantage. Bitcoin is something that you carry in your head. It's on the blockchain and you have the key and the seed phrase. You can access it whenever you want, but it's something you can go anywhere in the world that you want, and it's in your head. You don't need to carry it physically. So in terms of portability, Bitcoin is far superior to gold. I don't think there's any argument there. The next attribute would be divisibility. You want to make sure that you can divide it to many, many decimal points so that you can be incredibly accurate. And again, in this attribute, I would say Bitcoin is superior to gold. Bitcoin is mathematically based and goes into as small as you want. So it's just much easier, much more accurate than anything that you can do with gold. So in terms of divisibility, I think Bitcoin wins. Okay, another property that would be desirable would be fungibility. Okay, I want to be able to take my value and I want to be able to convert it into other currencies easily. Now here, I would probably call it a tie because different countries have different regulations in terms of buying and selling gold, and in terms of centralized digital exchanges. So some countries, you might need to use a VPN to access a centralized exchange because it's illegal in that country to convert Bitcoin to fiat. But the same can be said with gold. Some countries have restrictions on owning or buying and selling gold. So I think in terms of fungibility, we'll call it a tie. Okay, scarcity. Now here, realistically, now they're both considered fixed supply assets, but I think Bitcoin wins because there will never be more than 21 million Bitcoin, no matter what. Gold is different. Somebody might find a massive gold mine somewhere and the supply could change. Gold is also tricky because we don't really know exactly how much gold is out there in the world. No, it's impossible to calculate because people wear it and things like that. So it's very, very hard to know exactly how much gold is out there. I think in terms of scarcity, Bitcoin, I think would be superior. Okay, what other properties? Stability. You want a store of value that is very stable over time. Now here, we probably have to give the advantage to gold simply because of its longevity. Gold has been around forever. People have been using it as a store of value forever. And also because, when we say stability, we're also talking about price stability. Bitcoin is still highly volatile because it is a nascent technology. Now, this is not unusual. If you look at a chart of Google or Amazon in the early days, some of the drawdowns were 75%, 90+%. That doesn't happen anymore because it has grown and matured. So it's not entirely surprising that Bitcoin is still volatile. But that volatility decreases as it grows and matures. But that said, I think in terms of stability, we'll give it to gold. Okay, recognizability. I think gold wins. We all know what gold is. Not many people understand Bitcoin, but everybody knows what gold is. So I think recognizability, we give it to gold. Uniformity. You want to make sure that your money is the same. My dollar has to be the same as yours. You can't have different types of dollars, right? Or types of Bitcoin. Now, in terms of this, I would say Bitcoin is superior because it is true that there are different calibers of gold. Some gold is more pure than other gold. And because that is the case, in terms of uniformity, I think Bitcoin has the advantage. In terms of transparency and trust, probably a tie. That's kind of really hard to say. I mean, transparency and trust, the Bitcoin blockchain is totally transparent. You can see every transaction on it. But then again, you could probably see all the transactions in gold as well. I think in terms of trust and transparency, I think let's call it a tie. Okay, adaptability. I think adaptability, I'd give the advantage to Bitcoin because it's a technology-based money. And of course, it's very easy to sort of adapt it as we move into this digital age. I think it's much more adaptable than gold, which is actually a physical asset and very hard to manipulate. In terms of security, probably the same. I think you can find ways of storing gold in a very secure way. And of course, Bitcoin is very secure if you're careful with your key and your passwords. Okay, in terms of access, probably I think Bitcoin has the advantage because anybody in the world can buy Bitcoin. All you need is access to a cellular network, and you can buy Bitcoin. Gold is harder to buy because it requires you to use a financial intermediary. All those ads you see on TV of people selling, buy gold, well, you're getting a certificate. No one's going to send you a block of gold. I mean, that's very unlikely. In terms of access, I think Bitcoin would probably win. So in terms of comparing the two, it's true that, look, in gold you win that sort of stability, long-term store of value, and recognizability. But all the other properties like portability, divisibility, scarcity, certainty, adaptability, and accessibility, actually Bitcoin fares better in terms of those properties. So what this means is that it's something that we need to take seriously because it has properties that give it a very valuable utility. So you have to kind of keep that in mind. Like if you look objectively at the properties Bitcoin has, it's very useful and I think solves a lot of problems. So it's important to keep that in mind when we look at Bitcoin. Now, one thing I want to emphasize that the mainstream media doesn't focus on a lot, like Bitcoin is always discussed in the context of inflation, as an inflation hedge. But very rarely do people discuss the decentralization of the network as one of the most positive attributes. And I think this is the single most positive attribute of Bitcoin. And let me explain why. You guys might remember a few years ago during COVID, there was a trucker strike in Canada. And at that time, the government actually froze the personal bank accounts, not only of the truckers that were striking, but anybody that made a financial contribution to the truckers. Now, irrespective of your political views, I think that we can all agree that this is an incredibly alarming precedent, that a government can freeze your personal money for political reasons. This is an extraordinary precedent, I think a very, very dangerous one. And again, this is, it doesn't matter whether it's a conservative or left-wing government, this is just a very, very frightening precedent, I think objectively speaking. You'll also remember Nigel Farage, a very famous conservative politician in the UK. He had an account at a private bank called Coutts, which was owned by NatWest. And from one day to the next, without any warning or any explanation whatsoever, he was informed that his account was going to be closed. There was no explanation other than his political views. So here we have, and by the way, he tried to open accounts at 7 other financial institutions in the UK afterwards, and he had the same problem. They wouldn't let him open an account simply because of his political views. Now, this is alarming. This is alarming because we're talking about the possibility of a government intervening in your personal finances, and even financial institutions exerting their own political judgment about you and choosing to kick you out of a bank. I mean, these things are a little bit frightening, and the beauty of Bitcoin in this regard is that it's completely decentralized. I can hold it, and nobody can take it. Nobody can take it. We're going to discuss this in a minute, but nobody can take it from you. It's impossible because you don't need a government in any way, shape, or form, or a financial institution in any way, shape, or form. You hold it yourself, and it's in the sky, in this sort of ether sphere, and it's in your head. It's impossible to kind of confiscate. So again, if we look at this objectively, there's something here that is worth looking at. Now, one thing that we need to do is dispel a lot of the narratives that you kind of hear superficially in the mainstream media about. Some of them are kind of funny about Bitcoin. So what are some of the things that people say, that I've heard people say? So some of the arguments I've heard are, number one, well, it's not real. Like, Bitcoin is stupid because it's not real. It's digital. It's not physical. You can't touch it. Therefore, it's not real. Okay, this argument is ridiculous because if you get an email from your boss telling you you're fired, that email is real. Okay, that has real life implication, and it's digital. It doesn't exist in physical form. You're not touching the message. It's digital, but it's real. If your partner sends you a text message saying "I love you," that's real, and it's digital. We live in a world that is increasingly digitalized. Everything is digital. And reality is becoming digitalized. So the idea that something is not real because you can't touch it and feel it in the physical world is absolutely absurd, especially in today's day and age. So we want to dispel that one. That's kind of an easy one. Another thing I've heard as well, what if the government bans Bitcoin? The government cannot ban Bitcoin. Okay, the Chinese government tried to ban Bitcoin. Do you think it's had any impact whatsoever? Of course not. You cannot you can't ban it simply because the only way to ban Bitcoin, because you don't even need Wi-Fi, you just need a cellular network. The only way that you could ban Bitcoin effectively and enforce it would be if you shut down all the cellular networks in every jurisdiction in the world at the same time. That would be the only way to stop it. As long as I have a cellular network somewhere, I can access the Bitcoin. So it doesn't matter. And of course, people have VPNs, but even if they can manage to block a VPN, it is literally impossible for a government to implement any kind of ban on Bitcoin. The genie's out of the bottle, and you can't put it back in. And I don't think that the entire world is going to shut down their cellular services just to ban Bitcoin. So I think this is a completely unrealistic thing. All you need is a cellular network, and you got your Bitcoin. Okay, number 3, the comments that a lot of legacy people, there's a lot of resistance in terms of legacy finance. Now, this is perfectly understandable. You hear comments, for example, Jamie Dimon. Jamie Dimon, who runs one of the biggest banks in the world, and of course, he always tries to discredit Bitcoin, but what do you expect him to do? If you run one of the biggest horse and buggy companies in the world and somebody just invented a car, I mean, of course, you're not going to be happy about it, and you're going to try to discredit it, because if you think about what Bitcoin can do, the power of Bitcoin as a monetary network, completely outside of the system, and if you look at what's happening in the world of decentralized finance, where people are actively lending to each other with collateral, and this is done through smart contracts on the Ethereum network, and you can borrow and lend to each other. And if there's any kind of default in payment, it just reverses proportionally the collateral, and all of this is done instantaneously. So you can envision a world where every asset in the world is tokenized. Let's say a house. Every property in the world would be tokenized. The token would have all of the information publicly available on the house. And let's say I wanted to buy a house and I only have 20%. I want to borrow the other 80%. Well, why would I need to go to a bank? If that asset is tokenized, I can borrow money from any of 8 billion people in the world. One guy will let me borrow 50 grand at 6%. Another guy will let me borrow 100 at 6.2. I can borrow money, and it's collateralized against a proportion of the token, and all of this runs on smart contracts. So you can envision a world where there is zero need for banks at all. And this is a technological reality because the technology is already there. And so, of course, what do you expect a guy like Jamie Dimon to say? I mean, he runs the biggest horse and buggy company in the world. So, of course, he's going to talk down Bitcoin. Of course, he's going to talk down DeFi. So, don't be surprised. Another, famous resistor of the concept would be Warren Buffett and Charlie Munger. Now, Warren Buffett and Charlie Munger are among the greatest investors in the history of financial markets, and there's no doubt about that. But two things we have to take this with a pinch of salt. First of all, they're very heavily invested in insurance companies. They're very heavily invested in the legacy financial system. Clearly, they're not going to advocate for a new technology that makes all of that obsolete. And secondly, let's be honest about this. Warren Buffett missed every tech trade in the history of mankind. I mean, he's a wonderful investor if you look at sort of legacy, consumer products, traditional financial services. He's a wonderful investor, but he missed every single tech trade in the history of mankind, okay? Whether you're talking about, the Yahoo in the old days, or Google, Amazon, Netflix, Tesla. He bought Apple. He bought Apple way too late when it was practically a utility. So, this is an innovative technology, and I just would never expect Warren Buffett to understand it. So I think you have to take those criticisms with a pinch of salt, because these are people that have very strong, huge vested interests in the legacy financial system. So we have to be a little bit careful and dispel some of those criticisms. Okay, number 4, another narrative I hear is the Starbucks argument. Bitcoin is useless because I can't use it at Starbucks. Well, you can't use gold at Starbucks either, and gold has been an incredible store of value for hundreds of years. Bitcoin was not designed for you to buy your coffee. Maybe one day you will, as I've explained, but that's just a silly argument. Bitcoin is a store of value. It is not designed to go to Starbucks. Okay, number 5, Bitcoin is only used by gangsters and for illicit activities. Actually, the opposite is true. Every transaction on the Bitcoin network, you can see, it's all public. There's total transparency. When Bitcoin goes from one wallet to another, that is on the ledger and everybody can see it. So, I mean, if you're a gangster and you're sending Bitcoin around, that's not a really good idea because there's so much transparency in the Bitcoin network. There's a lot more criminality in cash and in the dollar system, I can tell you by far. Okay, number 6. The energy issue. Okay, and here we have to talk about Bitcoin mining. Now, in order to grow the network, the way it was designed is that you had to mine for Bitcoin initially. So what you did is you solved a bunch of mathematical problems that were then validated by the network, and your reward would be a Bitcoin. Now, at the beginning, when the network was very small, this was very easy to do. You could do it with a laptop or a desktop computer. But as the network grew, it becomes more and more difficult to mine every incremental Bitcoin. So now, there's going to be a total finite supply of 21 million Bitcoin. So far, just under 20 million have already been mined. So there's just over 1 million left to mine. But every one of those is going to be incrementally harder to extract because the network has grown so much. And of course, it has to be validated by the entirety of the network. So the computational power that you need to mine every incremental Bitcoin has grown tremendously. Now, there's been a lot of discussion about the environmental impact of energy usage in Bitcoin. But again, this is just such a superficial comment. If you actually get granular and look at the Bitcoin miners in the world and where they're located, they're all located as far from the grid as possible. They don't want to compete with cities for energy. They are strategically based near hydroelectricity sites, near renewable energy sites that are mostly off the grid. So the idea that somehow Bitcoin is bad for the environment, it's simply not true. Most of the energy that is used is renewable. Hydro is a very, very big part of that, and it's completely off the grid. This is energy that's off the grid. Nobody is going to pay up to compete with cities for electricity. So again, this is one of those narratives that I think you hear a lot, but is not necessarily accurate. I think we use more electricity on Christmas lights than Bitcoin mining. Okay, number 7, the quantum threat. Well, what happens if quantum computers can de-encrypt anything? Well, the first thing I would steal if I had that capability would not be Bitcoin, because the moment I'm able to do that, to sort of hack and decrypt the entire network, every single participant in the entire network, the value of Bitcoin would go to 0. So you will have effectively stolen something that has 0 value. So I would strongly suggest if you have quantum de-encryption power, I would start with banks, financial institutions, asset managers, sovereign wealth funds. Bitcoin would not be the first place I would go if I had quantum technology available to me to steal money, because the value of Bitcoin will go to 0 the second people realize it's stealable. So anyway, that threat I think is also exaggerated. And then the final kind of common one is, well, Bitcoin must be some sort of scam. And again, this comes with that notion of association with the word crypto. But again, this is simply not true. This is a digital monetary network, and you have to play around with it to understand it. Buy some Bitcoin, send it to a friend in another country, use it. And when you do, you realize how it works. So look, if you look at this as objectively as you possibly can, there is value here. Now, whether it continues to take off or not, I don't know. But what I can tell you is that if you look at it very objectively in terms of the properties that it has, the problems that it solves, and the utility that it brings, it's very compelling. So you have to be objective when you look at this. And if you look at it objectively, there's something here, which is why I'm not surprised to see so much institutional adoption. A lot of banks now are custodying Bitcoin. You have a ton of ETFs. Now you can buy it, through your broker. This is a trend that I don't think will stop. This will continue to grow. Videos like this and people becoming curious, this is the way that things grow and mature when more and more people understand it and have access to it, which increasingly they do at the institutional level. So anyway, those are our thoughts on Bitcoin from a kind of nerdy perspective. But those are our thoughts. I hope you found it informative. Thanks for joining me, and looking forward to seeing all of you guys in the next video. Thank you.